So here is my investment checklist for a bank to evaluate a bank, whether it is poised for growth or it's a poorly performing bank. Until next time. Fifth is a profitability bucket. And this is the bucket that I would look towards the end, because the guidance of every bank, of every company or financial company releases a set of numbers that it wants to achieve: a very strong NIM, which is the net interest margin, a strong return on asset, a strong return on equity. It wants to continue increasing its numbers within these 3 or 4 profitability ratios. But I would only consider looking into these ratios somewhere towards the end of the year, towards the end of the quarter, like the fourth quarter. And another number that I would really consider very deeply would be the cost to income ratio, which is basically the ratio of the operating cost, the amount of costs the bank is incurring versus the amount of operating income it's achieving from these loans and everything that it's lending to these various consumers. So the lower the number, the lower the operating costs, the higher the profitability for any bank. So it wants to make sure that it's incentivized very deeply to continue to make sure that the cost to income ratio is as less as possible. It wants to make sure that as less cost as if it's achieving as less amount of costs as possible, just to continue to remain profitable over the long run. So here is my investment checklist for a bank to evaluate a bank, whether it is poised for growth or it's a poorly performing bank. Until next time.